Hey there, it's Pac-kun. Today, we're exploring the Snipe trade strategy from Global Trading Techniques. Introduced to me by a viewer's comment, it's the Snipe trade method. This strategy was crafted by the renowned FX YouTuber, Sasatchi-san. He claims it's a high success rate yet simple strategy. Let's test this out on TradingView. In this series, we are rigorously testing various global strategies, logics, systems, and indicators, even the questionable ones, to see if they truly work. Dubious strategies are everywhere. From YouTube to blogs, let's uncover these deceptive tactics. If a strategy performs well here, it might be genuinely effective. If it aids your trading, please subscribe and like, it keeps me motivated. Alright, let's dive into the Snipe trade strategy. Check it out on this part of the screen. What is the Snipe trade strategy? This strategy is applicable on TradingView and MT4 platforms. In short, despite its flashy name, it's essentially a classic trend-following trade. Using Dow theory, it identifies trends and confirms support-resistance shifts with horizontal lines once the entry conditions are set on a smaller time frame. You make your trade, however. Discretion plays a significant role, making it less replicable and challenging for beginners, yet the skills required for this discretion are worth learning. If you don't see positive results after following this classic strategy for about 6 months, FX trading might not be for you. Let's see if this strategy truly leads to success. Introducing the indicators for Snipe trade. Simple moving average SMA. The SMA calculates a simple average of prices over a specified period. For instance, a 20-day SMA is computed by dividing the total of the last 20 closing prices by 20. It smoothens price fluctuations and aids in identifying trends, making it suitable for capturing long-term tendencies. Since the SMA gives equal weight to past prices, it might not fully adapt to the latest data. Exponential moving average EMA. The EMA is an exponential average that places greater weight on recent prices, allowing it to respond quickly to recent price trends. It's used for trend identification, with a rising EMA indicating an uptrend and a falling one suggesting a downtrend. Crossovers between short-term and long-term EMA letters serve as trade signals when the short-term EMA surpasses the long-term EMA. It's a buy signal, and vice versa for a sell signal. The EMA can also be used to identify support and resistance levels, as prices may show support or resistance at the EMA level. Combining with other indicators. The EMA is often used in conjunction with other technical indicators, such as the Relative Strength Index RSI, other moving averages e.g. long-term SMA and short-term SMA, and support and resistance lines. By combining these indicators, one can craft a more robust trading strategy. For instance, an EMA crossover paired with specific RSI levels can determine entry and exit points. In technical analysis, these indicators are commonly used to analyze market trends and support trading decisions. However, understanding and effectively using these indicators require hands-on experience and practice. Bollinger Band. The Bollinger Bands are a widely used technical analysis indicator, developed by John Bollinger. This indicator assesses price fluctuations and aids in identifying trend reversals. And comparing with past prices, the Bollinger Bands have the following characteristics. Moving average. Bollinger Bands typically use a moving average, either SMA or EMA, as the central line. This represents the average price over a certain period, like the commonly used 20-day SMA. Upper and lower bands. Flanking the moving average are 2 bands on each side. These bands are calculated using standard deviations, typically bands at +1 sigma 1 standard deviation, plus 2 sigma to standard deviations, 1 sigma minus 1 standard deviation, and -2 sigma -2 standard deviations are drawn. Statistical perspective. Bollinger Bands are based on statistics, assuming price fluctuations follow a normal distribution, statistically speaking. There's about a 95.45% chance prices will fall between the plus to sigma and minus to sigma bands, suggesting most trading occurs within this range. Evaluating trends and volatility. Bollinger Bands assist in gauging the strength of trends and potential reversals when prices deviate from prior band ranges. Approaching the upper band often indicates overbuying, while nearing the lower band suggests overselling. Bollinger Bands are incorporated into various trading strategies for identifying trends, determining entry-exit points, and assessing volatility. Due to their statistical foundation, they're widely recognized as tools beneficial for objectively evaluating market shifts. Related impossible to lose. Free indicator on TradingView with perfect buy-sell signals. Key points of the strategy: money management, per environmental awareness, entry trigger settlement. Snipe trade strategy explained. Time frame, multi-time frame, currency pair, Forex. For short trades, recognize the environment typically. Start from the monthly chart and proceed sequentially. It seems the 4-hour chart is often the primary reference. Draw horizontal lines at areas considered as support and resistance. Using Dow theory, target areas where the trend is likely to continue. Use moving averages for resistance and trend determination. If recognized on a higher time frame, measure entry timing on the 30-minute chart to levels below. Enter when breaking significant lows or moving averages. Take profit. Generally, risk-reward is 1-to-1. Extend if it seems feasible based on environmental assessment. Stop loss, cut loss. Recent highs. For long trades, recognize the market environment typically. The 4-hour chart is the main reference. Draw horizontal lines at areas regarded as support and resistance. Using Dow theory, aim for areas where the trend is likely to continue. Use moving averages for support and trend determination. If the environment is recognized on the 4-hour chart, gauge the entry timing on the 30-minute chart to levels below. Enter when breaking significant highs or moving averages. Take profit. Generally, risk-reward is 1-to-1. Extend if it seems feasible based on environmental assessment. Stop loss and cut loss. Recent low. Snipe trade strategy backtest results. The period tested this time spans from January 3, 2022 to September 11, 2023, totaling 616 days, 1 year, 8 months, and 8 days. The currency pair examined was USD, JPY on the 4-hour and 30-minute charts. This seemingly random duration has no specific significance. It's the maximum period I could backtest on TradingView. Thoughts after testing. A win rate of nearly 70%. With a risk-reward ratio of 1-to-1 is a decent result, I believe. Testing for 1 year and 8 months with only 10 trades is too few, as the person mentioned. To do this full-time, one must monitor multiple currencies, as they also pointed out in their money management video, considering the lot size. It's tough to do this as a primary profession. Days passed, 616 days. Total trades, 10 winning trades, 7 losing trades, 3 total profit, 215.5 pips. Total gain, 357.5 pips. Total loss, minus 142 pips. Profit factor, 2.52. Win rate, 70%. Loss rate, 30%. I asked ChatGPT for improvements on the sniper trade strategy. The video got lengthy, so if you're interested, please check out the blog. How was it? If you're interested, try it with different currency pairs. Also, if viewers have any websites, YouTube channels, or questionable strategies in mind, please share. I'd love to investigate those that seem testable in the future. Until next time, this was Pac-kun.